Purchasing a home is often perceived as a costly endeavor, particularly when considering the substantial upfront investments required, such as down payments, closing costs, and additional fees related to property transactions. However, when these expenses are juxtaposed with the perpetual costs of renting, where rent hikes are increasingly common, the financial scales may tip in favor of buying. This is particularly pronounced in urban centers and in demand locales where the escalation of rent outpaces that of home prices. The real estate market is dynamic, influenced by a complex interplay of global and local economic factors, changes in interest rates, demographic shifts, and variations in housing supply and demand. As potential homebuyers consider entering the market, it's crucial to understand how these trends can affect the affordability and strategic timing of purchasing a home. Firstly, economic conditions play a pivotal role in housing markets. In times of economic growth, increased employment rates and higher disposable incomes can drive up demand for housing, leading to higher home prices. Conversely, during economic downturns, home prices may stabilize or decrease, presenting potential buying opportunities. Monitoring economic indicators such as GDP growth, unemployment rates, and consumer confidence can provide insights into future market trends and help in making informed decisions. Interest rates are another significant factor affecting home buying. Central banks adjust interest rates to manage economic growth, which in turn influences mortgage rates. Lower interest rates reduce the cost of borrowing, making mortgages more affordable and increasing the buying power of consumers. This can lead to a surge in market activity as more buyers are able to afford homes. Prospective buyers should keep an informed eye on central bank announcements and economic forecasts to anticipate changes in interest rates. Additionally, demographic trends also influence the real estate market. For instance, the aging of the baby boomer generation has implications for housing demand, as more seniors downsize or move into retirement living. Simultaneously, millennials are entering their prime homebuying years, and their preferences and economic power will shape the housing market significantly. Urbanization trends, family formation rates, and migration patterns also play critical roles in determining regional housing demand. Supply of housing is another critical aspect. In many urban areas, housing supply has not kept pace with demand, which has led to increased prices. New construction rates, government housing policies, and land availability all affect the number of homes on the market and, consequently, prices. In regions where construction is robust, the increase in housing supply can help moderate price growth, making homes more affordable for buyers. Lastly, local factors must also be considered. Every housing market is unique and can be influenced by factors such as changes in local industry, public infrastructure development, and zoning laws. For example, a new public transport line can increase property values in previously less accessible areas, and changes in zoning laws can open up new areas for residential development. Understanding these market trends and how they affect local and national housing markets can empower potential homebuyers to make strategic decisions. Whether it's choosing the right time to buy, selecting the best area for investment, or negotiating purchase prices, a deep understanding of market conditions can provide a critical advantage in the home buying process. Interest rates are a critical determinant in the affordability of buying a home. When rates are low, the cost of borrowing decreases, making home loans more accessible and reducing the overall financial burden of purchasing a property. Prospective buyers should monitor interest rate trends closely and consider securing a mortgage when rates are favorable, to capitalize on lower repayment terms. Beyond the immediate financial layout, homeownership is a long-term investment. The equity in a home builds as mortgage payments chip away at the principal balance, and property values often appreciate over time. This dynamic can result in significant financial gains, in stark contrast to renting, where monthly payments accrue no property interest or potential for capital growth. One of the most compelling financial incentives for buying a home instead of renting is the range of tax benefits that homeowners can access. These benefits are designed to encourage home ownership by making it more affordable, and they can significantly reduce the overall cost of owning a home over time. The mortgage interest deduction is perhaps the most well-known tax benefit for homeowners. This deduction allows homeowners to reduce their taxable income by the amount of interest paid on their mortgage each year. For many homeowners, especially in the early years of a mortgage when interest payments are at their highest, this can result in substantial tax savings. The deduction is particularly beneficial for those in higher tax brackets, as the savings are greater when the marginal tax rate is higher. Homeowners are also eligible to deduct the property taxes they pay on their primary residence from their federal income taxes. This can be a significant deduction, particularly in areas with high property taxes. By reducing taxable income, this deduction directly lowers tax liability, providing financial relief to homeowners and making home ownership more attainable and sustainable. For homeowners who use part of their home exclusively for business purposes, the home office deduction can be an additional benefit. This deduction allows homeowners to deduct a portion of their home expenses, including mortgage interest, property taxes, insurance, and utilities, based on the percentage of their home that is used for business. This can be particularly advantageous for self-employed individuals and those who work from home regularly. When buying a home, buyers may choose to pay points to lower their mortgage interest rate. These points, which are prepaid interest, are deductible in the year they are paid if they meet certain conditions. This upfront deduction can provide significant initial savings and help reduce the cost of financing a home. Homeowners who make qualified energy-efficient improvements to their homes, such as installing solar panels, energy-efficient windows, or heating and cooling systems, can benefit from federal tax credits. These credits not only reduce tax liability but also help lower future energy costs, promoting long-term savings. When homeowners sell their primary residence, they can exclude up to $250,000, or $500,000 for married couples filing jointly, of capital gains from their income, provided they have lived in the home for at least 2 of the 5 years preceding the sale. This exclusion allows homeowners to keep a significant portion of the profit from the sale of their home, tax-free, which can be a tremendous benefit when upgrading to a larger home or downsizing in retirement. The tax benefits associated with home ownership can make a significant difference in the financial calculus of buying versus renting. By lowering annual tax bills, providing substantial deductions, and offering credits for specific improvements, these benefits not only make home ownership more affordable but also reward homeowners for their investment in real estate. Prospective buyers should consider these tax implications carefully and consult with tax professionals to fully understand how these benefits can apply to their individual financial situations. One of the most significant advantages of a fixed-rate mortgage is the stability it offers. Unlike rent, which can fluctuate and generally increases over time, the principal and interest components of a fixed-rate mortgage payment remain constant throughout the loan's term. This predictability is invaluable, as it shields homeowners from the vagaries of the rental market, where increases are common and often unpredictable. Owning a home has traditionally been a cornerstone of personal wealth accumulation. A mortgage functions like a forced savings plan. With each payment, homeowners increase their equity in a potentially appreciating asset. This contrasts sharply with renting, where payments contribute to the landlord's equity, not the tenant's. The benefits of homeownership extend beyond finances. Owning a home provides emotional dividends such as a sense of permanence and belonging. Homeowners often feel more connected to their community and have a greater vested interest in community affairs and improvements. Additionally, homeownership allows for greater personal expression and lifestyle stability, which can significantly enhance one's quality of life. When considering whether to rent or buy, it's crucial to evaluate not only the comparative monthly costs but also the long-term impacts on net worth, stability, and lifestyle. Potential homeowners should conduct thorough market research, assess personal financial situations, and consider long-term life plans. Consulting with real estate and financial professionals can also provide valuable insights and guidance. While the decision to buy a home is multifaceted and highly personal, current market conditions and the long-term benefits of homeownership suggest that buying might indeed be the cheaper and more advantageous option for many. Homebuyers who approach the market at the right time, with solid financial grounding and a clear understanding of their long-term objectives, stand to gain immensely both financially and in terms of their overall life satisfaction.